Hello and welcome back to the channel and to a quick little hindsight video. It's a video where we are looking back at a couple of stock positions that we have talked about in earlier videos, and today we are also going to have a look at a stock that we actually took in one of our portfolios here on MyStockScanner, and that is the portfolio on the value momentum, which is actually inverse value and then high momentum. But I'll get back to that just in a second. The first hindsight stock I'm going to have a look at today is Nvidia. I know that many of you have followed my my videos where I'm talking about different stocks, and Nvidia was a part of one of our videos back here just before the earnings. It was back here when it was 900 and something. And what I said at that point is, and I should say, disclaimer right away, I don't own Nvidia, sadly. And the reason why I didn't take it at the current time was that I never buy a stock straight into earnings. That is simply too uncertain. There's too much volatility. But I know some of you don't care about that, and that has been great in a case like this. Now, what I said back here was that Nvidia was a fantastic company, low PEG ratio. The analysts just love it. They have a growing free cash flow. They have fantastic return on equity and capital employed here. So we loved everything about it. At that point where I looked at it, Nvidia had gone up just here in 2024. At this point, it was up something like 95%. And I had gotten some questions about if I thought that was too expensive now. And remember, we never advise on stocks. We never say you should buy it or sell it, because we really don't care. That is your decision. What we are looking at are the numbers. And the first question in our playbook is, of course, is it a solid company? Yes, it is well run. It's a fantastic company. However, some fantastic companies have a stock price that simply runs too fast, and it has to take a little breather. And what we looked at in the valuation here is, right now it is, we can have a look at it at a current situation and then back here, because the analyst target is a price around 1140, which compared to the current price is a drop of around 6.6%. Now, if they reach a target and they reach their estimates down here, that will end up with a price earning of 32. Now, looking back, have they had a price earning of 32 at any point in history? No, not as far as we go back here. We can go back a bit further here, but that doesn't help much. It was in 2019, it was lower, but otherwise it has been way higher than 32, meaning that we could easily put this as a 45, 50p, which gives us some very decent upside potential here, up in the 15 to 1700 range. Now, my point here today is that I said the exact same thing when it was back here in 900 something, just before the earnings announcement. I said, I actually hope they come up with a bit of a bad guidance so it drops 10%, because then I can get into it. I didn't like, I don't like buying a stock where I am chasing it upwards. So what I said back here was, at this point, just a day or two before earnings, we're saying it actually looks really good, and we see a potential upside here. Just if the analysts are right and the price earnings from the history could be just kind of the same, then we see a price in the 15 to 1700 range. And what has happened is that after the earnings announcement here, the price has gone up in just a few short weeks, 30%. 30%. And all we didn't know any, I don't know all the details about Nvidia. I have no clue how they produce their chips, or if the chips are the world leaders, or if Elon Musk loves Nvidia, or if I just know what I read in some headlines. I am absolutely not an expert. All I did was look at the analyst numbers and say, okay, if they're right, and we believe that the price earning could be at least as it has been on average over the last years here, then the price needs to go up further. And the question is, has it stopped now? Well, we never know. But just from this simple math, this indicates that there could be a 40, 50, 60% more upturn here. Will that happen? As I said, we have absolutely no idea, and you should never buy just because you hear someone on YouTube saying that a price could go somewhere, because it could be a lie, he could be biased, he could be full of you know what. So I will make another hindsight video in a year or so saying either yes, it went to this level, or we were completely wrong, it was cut in half. We don't know. Both things can happen. Anyway, that was the one hindsight thing. Then we have a bit of a shorter term one, and that is in one of our portfolios here, and I just picked one. Oh, by the way, let's go back to these portfolios and just say, let's see if I can here, have a look at how they did just yesterday. I know the market went absolutely crazy yesterday, but the quality momentum, which was up 11% so far this year, which was great, but high quality, high momentum stocks went up 2.1% yesterday. Our TPI Plus went up 2.8% yesterday. The value momentum, and that is stock with high momentum but terrible value, went up 3.5% yesterday. It's up almost 19% so far this year. And the value quality, and you could expect, okay, high value, high quality, is that really a market for that right now? Well, it's still up 10%, which is, when we go into it, actually double of the index we compare to, which is the RSP. So anyway, I had someone ask me the other day and said, why on earth are you using RSP? It's completely wrong index to compare to, because the S&P 500 has gone up a lot more this year. Yes, you might be right, and that is correct this year. But if you compare it back to, I think it's 2003, where we had the first RSP quotes on, there is the S&P 500 is up something like 787%, and the RSP is up 784%, something like that, 83. So there is 3 or 4% difference overall in performance over 20 odd years. So RSP and S&P 500 is basically the same in the long term. We just feel that RSP is a bit more honest because it gives the same weight to every single stock. But that is another story. One of the stocks I have picked from the value momentum here today is Moderna. We all know it with the vaccines and stuff, but it's a good example because we actually bought Moderna just here to the portfolio, and all our paying members were shown that Moderna was the one to buy here on the 3rd of June, where that was the first trading day. And if they are following the portfolios, then they would have entered Moderna down here around 140, 141. Since then, the Moderna in just 3 short days are up something like 10%. And that is the power of having different strategies, because if we look at Moderna, we normally pick a stock like Moderna in our 3-point playbook. Well, they have terrible value. They have no PEG ratio because the earnings per share growth have been terrible. It is estimated to go up, but we would never, in our 3-point playbook, we would never invest in a stock that hasn't shown consistent earnings. If we're looking at return on equity and so on, that is negative. There's not much here to like, actually. You can like the product and everything, but from our investment question number 1, is this a solid company that makes a ton of money? Then Moderna would just be deleted from the list. I would never buy it. But looking at different portfolios that have different focus areas, quality momentum, low value, high momentum, quality, and then some timing on the daily TPI, high value, high quality. That means that we are not just diversifying in different stocks. We are actually diversifying in different strategies that have their wins and their losses in different types of markets, which equals out our equity line and makes it all a lot more smooth. But so far this year, everything is going up, and our collective portfolio is up something like, I haven't even calculated from yesterday, but it must be somewhere around 10 to 11% for the entire year across these 3 portfolios. and what is the stock market up. Let's just have a quick look. We can look at the S&P 500 just to show the difference between the two, and you can see that the S&P 500 is up so far 13%. That is crazy. And then the RSP is up, let's see, maybe a bit less, because it's not giving us much weight to these big Magnificent Seven. So the RSP is up 5.5%. As I said, we feel that the RSP is a bit more honest, but that is entirely up to you. You can use whatever benchmark you want, and you can just change it in your portfolio in MyStockScanner. That was all the Hindsight for today. I will be back next week with a new Hindsight video. Until then, take care of yourself and your money out there. I'll speak to you again shortly. Bye.